MicroStrategy has turned Bitcoin's volatility in the global bond market into a money printer. What do I mean? Well, Michael Saylor, Dylan LeClaire, and BitPain have been talking about how Bitcoin is taking on the global bond market. Many people have seen Saylor's tweets saying he just issued $500 million convertible note to buy Bitcoin, and he pays less than 1% interest to do so. Now, this confuses many people, and even some people in traditional finance. How is he able to borrow $500 million and pay almost 0% interest? Well, smart finance types will recognize that a convertible note is half debt and half equity. So the convertible note buyer gets upside if the price of MSTR goes up enough, but they're protected if MSTR goes down. This is basically MSTR selling a call option on their own stock. MicroStrategy is selling the right to buy $500 million worth of MSTR stock at a specific price higher than the current market price years into the future. For example, they borrow money by selling future MSTR shares for $2,500 per share with downside protection of debt, while the current share price is only $1,500, and they use the money to buy more Bitcoin. Now, where things get rather interesting is how these convertible notes are priced by the market. Since they are effectively options, they are priced like options. One of the core inputs to pricing an option is something called vega, or implied volatility. Since MicroStrategy is one of the most volatile publicly traded companies in the world, because it holds a massive amount of Bitcoin, it makes their options very, very expensive because the volatility means there's lots of potential money to be made betting on the price moving up or down. So MSTR comes in and sells these convertible notes, and they're able to borrow money, buy Bitcoin, pay almost no interest, and the notes convert at a price significantly higher than the current share price. Taking it a step further, MicroStrategy and Bitcoin are currently so incredibly volatile because Bitcoin has been growing so fast. Bitcoin has had a 200% compound annual growth rate for the last 14 years. It goes through massive bull markets and massive bear markets with its various waves of adoption, but the core trend of rapid number go up is incredibly obvious if you're able to think for more than a couple years. So this volatility is effectively due to hyperbitcoinization, or the active monetization of Bitcoin, which we are currently living through right now. And again, this volatility is exactly what enables MicroStrategy to borrow cheap money and buy even more Bitcoin. So this somewhat creates a black hole for Bitcoin acquisition. It appears that Saylor can continue selling future shares of a stock at a much higher price than it's trading at today. And then he uses those shares to buy more Bitcoin. And he's doing this over and over again, redeeming older in-the-money convertible notes that are mostly like equity now, and then issuing more convertible notes at higher conversion prices, which are more like debt, until the price of Bitcoin goes up. This is almost like the market is paying him to buy more Bitcoin. If you're bullish on Bitcoin with a multi-year time horizon, then this seems like a no-brainer for the MicroStrategy executive team. It seems likely that they'll continue doing this Bitcoin acquisition strategy, and the global bond market will continue eating up these convertible notes. This is hyperbitcoinization.